Let me now bring on board Rakesh Bihani, Joint Managing Director of Pantaloon. Mr. Bihani, good morning. Thank you for joining us. First, tell us about the response from the recent 50% discount offer on the Republic Day. I mean, I distinctly remember you termed that sale day as Sabse Sasta Din.
The discount period is always lands up attracting a lot of more customers into the stores, and clearly the response has been very strong. Unfortunately, also as discount levels been on the higher side, especially in the lifestyle segment, as the whole of 2012 have really not gone off very well. Demand has been quite tepid, and it's been a kind of a difficult year in 2012. We still, even though the entire industry has been discounting, the cost prices have continued to be under pressure, especially on the apparel side, and with a lower than expected winter performance, the discounts were very, very high this season.
Rakesh, so overall, the festive season this time around was better than last year. Could you quantify the growth this festive season on a year-on-year basis?
On the lifestyle side, the response has been strong, as the discounts has also been on the higher side. On the value side, the performance has been very good. In most parts of the country, we've seen significant amount of growth, and we've also been able to do a improvement on the margin mix that we've been able to achieve. I think it's been overall a good performance. It's not very extraordinary, but within expectations that we set for ourselves.
Rakesh, it's been 4 months that government has already allowed FDI and multi-brand retail in India, but not even a single FDI proposal has come in so far. What are your thoughts on that? Are global retailers no longer hot on India?
On the FDI, on multi-brand, most of the FDIs, that the policy that has been announced right now really would attract customers or investors or retailers in the food and hypermarket space, because the requirement on back end, the requirement in sourcing, all those can be only fulfilled by that category. And here again, most of the rules and regulations related to food retail are most state subjects, and there are many rules and regulations. Some of them require addressal because it's not very easy to integrate on the back end considering the current mandi system that exists, or the current APMC system that exists. So it's imperative the fact that the states which want this investment to come, they have to look at what is that they're going to do, what are the rules and regulations they are going to apply, and that clarity is going to be very important. Whereas on other categories which are also very large in organized retail, categories like electronics, fashion, home, investing in back end to the extent of 50% of investment is not a practical number, and so thus attracting any FDI in that space is going to be a difficult one. Plus overall expected investment is about close to $100 million, and over and above that, all the confusion that has been created in terms of the coverage that we've had, the kind of responses that we had from various parts in the government or otherwise, I think every retailer is kind of looking at more clarity before they are able to commit themselves on FDI in India.
Rakesh, policy has come with riders like minimum investment of $100 million with 50% in back-end infra, 30% mandatory sourcing from local SMEs. Do you think these riders can act as a hindrance for foreign players to enter the Indian market?
I think, in some categories these riders are completely acceptable. So again, food, continuing to source on the SME segment is going to work. That's not a problem. But when it comes to electronics, fashion, and other categories, sourcing at that level from SME is not going to be possible. So that's definitely one reason that they are afraid, to be able to make an entry into India. But secondly, even the $100 million as a number across categories is not a large number, but to be able to invest 50% for every investment that you do in a back end in many categories is not possible. So that's what have we done. In the process, this FDI is actually kind of restricted to only a certain segment of the retail business, and in that segment, again, as I said earlier, the states are very, very critical part of it, and we've not heard from any state in terms of their approach to making the investment in retail an attractive one, their approach to simplifying the entire retail value chain or supply chain. And unless that's not going to happen, it's going to be a lot of ifs and buts. So people will be patient before the real investments flow through.
But Mr. Biyani, you've been focusing on restructuring activities. Are you looking at any other disinvestments? Analysts are talking about possible disinvestment, insurance joint venture, E-Zone, and now Hometown.
I think all the plans which have been announced, they are currently getting executed, and once they are in place, we'll have two retail operating companies, one for the fashion business and one for the value business, which includes the home business. And as of right now, we are all busy ensuring the fact that we can build in the new structure, have these companies listed and trading, and that is what we are going to do. Focus. We're very clear we need to keep expanding both our portfolios, and both on the same-store sales side as well as looking at new opportunities in terms of expanding into existing cities or maybe some of the new cities, and that's where the focus is. There is no other plan as such. On the divestment side, all the plans which have been announced, they're still in work in progress, and there's no other new plans currently.
Right. So are you seeing any signs of inflation easing off?
Apparel has seen a minuscule price correction compared to the growth that we've seen over the last 2 years. The growth over the last 2 years due to the excise duty regime as well as the raw material price has pushed up prices close to about 25 to 30%, and that has actually put in a lot of strain on the volumes in the industry. In fact, we have a lot of factories which are now only producing about maybe 50 to 70% of their production compared to what was earlier close to about 80 to 90%. So the dip has been quite significant. The problem with the excise duty regime has been that it's linked to MRP, whereas apparel is promotion driven, and so the excise duty impact is significantly high when you are running promotions. And unless and until the government really looks at the fact that, because the entire raw material chain is exempted from excise duty and only the finished goods is being charged, it is important the fact that the regime gets changed to more of an ex-factory price regime at a significantly lower rate. The industry has already approached the government. We hope the fact that the budget would kind of address that need of the industry, and I think that with the corrected regime, we would be able to do a lot more promotions, and there would be a significant amount of volume growth that is required for consumers to be attracted back into the stores. The raw material prices have been stable, but they are nowhere near the levels that they were at 2 years back. But I think with the volume growth that we can see, with the efficiency that the factory is increasing, I'm sure the fact that we could actually see the prices come down a little more. So I think to a larger extent, I think there needs to be a correction in the tariff structure which this industry is being charged today.
So is there any revival in the consumer sentiment? I mean, 2012 was not a good year for the industry. Do you think 2013 is going to be a bit better?
Well, consumer sentiment has been kind of mixed. There has been the festive season went off extremely well. We've had a lukewarm winter season, and again the promotion season has been quite strong. Hopefully, at least this year, all through summer, the festivities would be there. The marriage season is going to be a strong one. So I'm quite confident the fact that there should be a significant amount of recovery in sales. All of us are believing the fact that 2013 has to be better than 2012, because 2012 was very poor. But with some support and and direction from the government which increases consumption would only help the industry keep growing.
Right, Mr. Biyani, appreciate your time. Thank you for joining us.